Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20 plus year Treasury Bond ETF, the high volume ETF that is correlated with it's actually correlated with the ICE instrument. That is the 20-year Treasury Bond Index, U.S. Treasury Bond Index that you can find on the Intercontinental Exchange, ICE. Capital I, capital C, capital E. So there's an index there, and this ETF is correlated with it. In essence, it's correlated with the long bond. In other words, as the bond drops in value, this is a 5-year chart, interest rates climb. Interest rates have been climbing, have been on a progressively higher path since the incredibly low interest rates of COVID. This is the COVID low here from March of 2020. And so as the instrument drops, interest rates rise and vice versa. And so here we are with a 5-year channel top that we came close to testing back in September. And we did essentially test in late March when we pushed inside the 1% zone represented by the red line. 92.44 is the ceiling. In other words, holding below 92.44 maintains a 5-year bear market, if you will, in the ETF, in the TLT. In other words, a 5-year uptrend continues for longer term interest rates. That is has paused a bit for the last 18 months or so, since October of 23, close to 2 years. And so what is happening now is a violation of a channel bottom I've been mentioning in my updates now for many months. I've been mentioning this 84.72 channel bottom as a solid mid to longer term support. 84.72 able to contain selling as it did back in January and again in early April on a monthly, possibly seasonal basis. And up until this point, now the week is not over. This is the Wednesday settlement. So 83.97, below 84.72. 1% below 84.72. This is an important number for Friday's close, is 83.87. So if we close below the 84.72 formation by a full 1% margin of 83.87 or lower, we enter another significant 3 to 5 month sell signal. It would be equivalent to really what occurred from September of 24 to January of 25. This is a 3 to 5 month. I think it's probably 5 months exactly. Another one of these would be anticipated, wherein I would expect 66.85. This is a targeting mechanism, a full channel extension. We have this well-defined channel that we actually bottomed out at twice. And now that we're below it, I'm confident anticipating 66.85 by the end of the year or sooner. 3 to 5 month sell signal to 66.85. Now, 66.85 would be about a 21% drop from where we presently are. And what does that mean? Well, if the TLT moves 16.5%, it represents roughly a 1 to 1.25% move in longer term interest rates. In other words, the 21% is closer to 1.5, even 1.75% increase in the longer term interest rates by the end of the year. And that is what the charts are telling me, that if we close below 84.72 by the 1% margin of 83.87 on Friday, that is May 23rd, we enter that sell signal. On the other hand, if we can close at 84.72 or higher, then we are in a still stable state. And that is to say, through June into July, we can round back up to the 92.44 long-term channel top. This is the big test, 92.44. This is the formation we need to settle above to indicate a continued reduction in longer-term interest rates. But that is not what's playing out right now. No surprise here technically, because 92.44 is a much more significant 5-year channel top than the 84.72, call it a 20-month channel bottom. Closing below 84.72, the 92.44 5-year bear trend wins the day. And if we close Friday at 83.77 or lower, once again, I would expect the 66.85 area roughly over the next 3 to 5 months. On the way down, it's worth pointing out, and this is for those of you who actually trade the TLT and use it beyond just a sort of analysis of the longer term interest rate dynamic, closing below 84.72, this 80.04 channel bottom, which is, it's not a 1 year channel bottom. It will be in September, is expected. This could be a 3 to 5 week move. I would expect an increase in volatility if we get the sell signal. So this could be within 1 to 3 weeks. 80.04 dropping weekly. I'll be apprising you of this next week. It's 79.77, et cetera, et cetera, et cetera. This can bottom out. The market can bottom out here. I'm going to actually open this chart up and show the exact same formation here. We can bottom out here on a monthly basis and perhaps round back up to 84.72 within 3 to 5 weeks before we then presumably fall away again. We could follow this channel bottom for the next several months. But I think that the settlement below 84.72 carries with it a spike in volatility, and it should be within the next month or two that we actually then violate 80.04, which should present a more accelerated descent to 66.85. This could be inside of 2 to 3 months if we close below 80.04. 66.85 will be the overall objective if we close below the 84.72 formation, and there it is right here. So it remains to be seen. We're not there yet, but we're pretty darn close. And, this is basically the world demanding a higher rate of return on their money, on their investment, on the bonds, in exchange for what is becoming an increasingly less disciplined fiscal approach out of Washington. It's been happening for years, and it's ready to take another leap in that unfortunate direction. So I don't want to get preachy. I'm just, this is not good for any of us, really. So here we are. That is all I've got for this particular update from wickedstocks.com on the iShares 20-year Treasury Bond ETF and the TLT. You have a great day.